File photo. A pump jack is seen at sunset near Midland, Texas, U.S., on May 3, 2017. Reuters. Ernest Shader. New York. Reuters. Brent prices fell on Wednesday while U.S. crude rallied, after oil stockpiles in the world's top consumer unexpectedly drew down, with refiners coming back online following Hurricane Harvey last month. Brent LCOC1 slipped from 26-month highs to settle down 54 cents, or nearly 1%, at $57.90 a barrel, while U.S. West Texas Intermediate crude WTI-CLC1 ended 26 cents, or 0.5%, higher at $52.14 but stayed below 5-month highs. The market was hurt by strength in the dollar, which often moves in the inverse direction of oil prices. U.S. crude inventories. U.S. OIL-CECI fell 1.8 million barrels last week, the U.S. Energy Department said, versus forecasts for a 3.4 million barrel build. EIAS. The crude draw supported oil prices, but gasoline stocks surprisingly rose and stocks of distillates were down by less than anticipated. The crude number was definitely supportive but we're a little bit overbought, and the diesel figure wasn't bullish, and the dollar is keeping us back, said Phil Flynn, analyst at Price Futures Group in Chicago. Refinery utilization rates. U.S. OIL-UECI jumped 5.4 percentage points to 88.6% of total capacity, the highest since Harvey hit on August 25, after most facilities had come back online. The effects of that storm, as well as Hurricane Irma, which struck Florida earlier this month, may dampen demand for some time, potentially increasing gasoline inventories while crude stocks fall thanks to renewed refining activity. Oil prices have been supported by output curbs by the Organization of the Petroleum Exporting Countries OPEC and other major producers, although U.S. crude has lagged behind Brent amid concerns that U.S. production growth could stoke oversupply. U.S. crude production rose to 9.55 million barrels per day last week, higher than before Harvey hit, the Gulf Coast data showed. With Brent futures commanding their highest premium over WTI WTCLC1 LCOC1 in more than 2 years, U.S. crude has become increasingly competitive in foreign markets and exports hit a record of 1.5 million barrels of oil per day last week, according to data. Seeing exports of U.S.-produced crude that large would pose a threat to the level that the Brent premium can go, said Gene McGillian, manager of market research at Tradition Energy in Stamford, Connecticut. Diesel exports were also rising, in part because lower U.S. crude prices boosts margins for U.S. refiners compared with those in Europe. The dollar was higher, getting a boost from the nascent push for tax reform in Washington, D.C. Additional reporting by Amanda Cooper in London and Fergus Jensen in Jakarta. Editing by David Gregorio and Andrew Hayor. Standards to Thomson Reuters. Trust Principles.